Short exercise 7-12, General Journal. So let's review some things about the special journals. So special journals in the manual system, but also in a software package such as QuickBooks. They are used because it's inefficient to record all transactions in the general journal. So we have specific types of journals for specific types of transactions. For example, the sales journal will only contain sales on account. Cash receipts journal, you use that anytime you receive cash. The purchases journal is only for purchases on account. The cash payments journal is used anytime you pay cash. It's kind of like a check register, but everything else, all other types of transactions are still going to go in the general journal. So the general journal is going to hold transactions that are not very common, such as the adjusting entries that you do at the end of the accounting period, the closing entries you do at the end of the accounting period, sales returns, stuff like that. So in this problem, they're going to give us some transactions. We have to figure out, do they go into a special journal or do they go into the general journal? So it tells us here, journalize the transactions below that should be recorded in the general journal. If a transaction should not be recorded in the general journal, identify the special journal that should be used. Assume the company uses the perpetual inventory system. Record debits first, then credits. Select the explanation on the last line of the journal entry table. If an entry is not recorded in the general journal for a transaction, select no entry required on the first line of the table and leave all other fields empty. Alright, so you can view the transactions here, or they are also above each journal entry. So we have March 2nd, sold merchandise inventory on account. That's accounts payable. Terms, net 30 to B Kong, issuing invoice number 501 for 1,100, cost 1,090. So what journal does this transaction belong in? Well, this is a sale on account, so this goes in the sales journal. So this is not the sales journal, this is the general journal we are working in. So you would say no entry required for this particular transaction here. And then in the real world, you'd enter this transaction into the sales journal. Let's check our answer. Excellent. Okay, now on March 6th, issued credit memo to B Kong for $1,100 for merchandise returned to the business by the customer. Do not consider the accounting for the rate of the merchandise inventory at the cost in this step, so not the COGS step. We will consider that in the next step. So what has happened here? So remember in the previous transaction, we sold to the same company for the $1,100. And now they're returning those goods to us. And it says do not consider accounting for the COGS yet. So in this first transaction will be the amount that we were charging them for that merchandise inventory coming back to us. So first of all, do we enter a sales return, because that's what this is, into the general journal? Yes, we do. So we can include our debit and credit here of 1,100. And then let's discuss what accounts that will be to. So let's start with the easiest account to understand, and that is the AR, because remember we sold these items on account. So what happens to AR for this customer? Well, AR, accounts receivable, is an asset, and assets increase on the left side. So we'll have to decrease it on the right side. So I'm going to go ahead and skip this first line here since that's for the debit, and we are going to get to AR because we are lowering it to this B Kong AR. So what then is our debit account? Well, hopefully you remember that with a refund here, we will be looking at the account called sales, returns, and allowances. And that account is a contra revenue. So it has the opposite side plus side, so it goes up with a debit. So again, that's going to be sales, returns, and allowances. as a debit here. So let's go ahead and end our explanation here. Issued credit memo for sales return. So let's go ahead and check our answer. Good job. All right, so now on March 6th, we are doing the second part of that transaction. We accounted for the receipt of the merchandise inventory at cost. So this is COGS portion of that transaction. So we can find the amount one of two ways. So we can click on this link that says View Transactions and go to that March 2nd transaction here from BCong. So we issued that invoice for the inventory for $1,100, and that cost to us here was that $1,090. So that's that important number. This is the cost of the goods sold. So we'll input that 1,090 as the credit and the debit. And then let's talk about what accounts we'll need. So let's start with the account that's the easiest to understand. So when the inventory is returned to us, does it increase or decrease? Well, the inventory account is increasing, so that is my debit. So I'll input merchandise inventory here first as the debit account since we are getting it back and it is increasing with a debit. And again, that is because merchandise inventory is an asset that goes up with a debit. So let's go ahead and start talking about our credit account. So that will be costs of goods sold. Since that is no longer an expense for us, it is coming back to us. So our expense is then decreasing with a credit. So now we will need an explanation, and that will be issued credit memo for sales return. So it's part of that same transaction. It's just the cost of goods sold second piece. Let's go ahead and check our answer. Well done. And next, on March 21st, purchased merchandise inventory on credit terms of $310 net 30 from Price Co. for $800. So basically, we're purchasing inventory on account, and purchases on account go in the purchase journal, so not the general journal. So on this transaction, we'll have to say no entry required, as this is the general journal. So let's go ahead and check our answer. Well done. Okay, now on March 28th, return damaged merchandise inventory to Price Co., issuing a debit memo for $800. So I can put the $800 debit and credit in here, and then we'll figure out our account. All right, since we are issuing a debit memo, that means we are debiting AP. We are lowering our AP. So you issue a debit memo when you bought something on account. So I need to find AP for the Price Company here, AP Price Co. And why am I debiting that? Because remember, AP is a liability. Liabilities increase on the right side, so to lower that, we needed to debit it. So by sending them the debit memo, we're saying we no longer owe you the $800 because we're returning this inventory. And then what happens to our inventory when we return it? Our inventory is going down. So that will be our credit account, merchandise inventory. And then we have to have an explanation, and that is we issued a debit memo for purchase return. So let's go ahead and check our answer. Good job. And then in the final portion of the problem, it's asking us here if a transaction should not be recorded in the general journal, identify the special journal that should be used. Select the dates of the transactions not posted to the general journal and select the special journal in which each transaction should be posted. If an input field is not used in the table, leave the field empty. Do not select a date or special journal. So remember these two transactions that we did not enter into the general journal. That was the March 2nd one here, no entry required. And then also on the 21st here, another no entry required. We have to say down here what special journal should they have gone into. So for the March 2nd one, I'm going to input March 2nd. and we're going to take a look at that transaction. It says we sold inventory on account, and so that goes in the sales journal. And then the other transaction that we did not enter into the general journal was the March 21st transaction. Here we purchased inventory on credit, which means we purchased inventory on account. And purchases on account go into the purchases journal. So we'll input the 21st and purchases journal. So let's go ahead and check our answer. Well done. So hopefully this problem kind of helps you understand what types of transactions go into which types of journals.